Excellent. Let's get started. Well, hi everyone. I'm Dan Rosenhack. I'm the sports and data editor at The Economist, and I'm joined by Jeff Ma, who is senior vice president at Duetto and a well-known guru in the burgeoning field of sports gambling in the United States. So just to get started for listeners who may not be aware of all the background, since 1992, federal law prohibited any states that had not previously legalized sports gambling from doing so. The Supreme Court has now struck down that law, making it theoretically possible for sports gambling to be available nationwide. Can you just give us an update of which states have and haven't taken how much advantage of that flexibility now and why?
Yeah, so I mean, it's basically the classic sort of state by state, almost like land grab, where they're going and they're trying to figure out, like, you know, obviously New Jersey was one of the first ones, and they're the ones that are probably,
they filed the original lawsuit,
right? Yeah. And they're the ones that are probably getting the most notoriety. But you know, there's a bunch of other states, you know, like the Mississippis and the Pennsylvanias and whatnot, that are starting to push it through also. I'm not sure of the exact number, to be honest, because I've just generally been a little bit bearish on this whole thing, because I thought like the states would generally screw it up for a while before it became really an important thing for me to pay that much attention to.
So in what way did you expect them to screw it up?
Well, I mean, last year at the panel, we talked a little bit about it, and the NBA has pushed a lot on this whole concept of an integrity fee. And, you know, I think that's generally...
Share with us what the...
Well, integrity fee essentially is the NBA believes that they have a right to charge just off the top, basically, because they believe...
handle.
Yeah, they believe it's their IP, and you know, their positioning initially on that number was so big that everyone kind of scoffed. Yeah, everyone kind of scoffed at what that would mean. And the reason that I think that this is like generally a bad thing for the industry is because basically you have a very mature like black market, or, you know, it's just like when they legalized marijuana, there was a mature ecosystem of people that sold marijuana to people. I mean, no one would look the other way. No one would be so naive to believe that, like, you know, just by legalizing this, they had totally changed things, right? And the same thing is true of sports betting. There's a really big ecosystem of people that bet illegally or bet offshore. And if you have one side of the business that is having to pay a 1% handle fee or whatever it is, right, you're really making that other industry somewhat irrelevant, because they're not going to be able to compete on price. So that's what I mean by screw. I mean, there's other things I think that they would screw up. I mean, I don't think that, you know, like these places, a lot of them do not have like great mobile apps yet, or, you know, like mobile betting is obviously a huge piece of this. Like, you know, if you go to Vegas and you have to go and physically put a bet down versus, you know, like just sitting on your phone and making a bet, it's a huge difference.
Yeah, so I live in the UK, which has unlimited online sports betting, which has been transformational for my life and finances.
Right.
And still here, I mean, on that side of the pond, you can bet any amount you want from anywhere at any time. Yeah, on your phone, your tablet, computer, you name it. The fact that this is now a question of state rather than federal law in the U.S. means that obviously the internet exists across state lines. So how does the need to comply with the laws of states that have not legalized sports gambling limit the technological development of the industry?
Well, I mean, I think it's you don't have an opportunity to create the liquidity by one sort of business unless they're stretched across multiple states, right? And then you know, the idea of still being in a world where, you know, you have to physically be somewhere to do something, that's not like a world we normally live in anymore. Like, it's just very antiquated, right, to think about it. And the fact that like all of these licenses need to be tied to brick and mortar places is also very antiquated if you think about it. Like, if you weren't able to create an e-commerce site unless you actually had a physical store, right, where you were selling, and you had a license to open that store that you'd applied for, it doesn't make any sense, right? So that's what I mean by screw it up. So I guess, like, for me, when everyone talked about it being legal and it was such a big deal to everyone, I kind of yawned, because it's, you know, it's been happening in the United States for quite some time without any real friction.
Oh, but I'm surprised you say without any real friction. I mean, you know, clearly diehards and degenerates and the like will find a way to get their money down somehow, and and use Bitcoin or get an offshore bank account or something. But that's a very small share of the sort of potentially addressable market for this business. And your sort of small fry punter who just wants to put $10 down on his home team, like, that guy's not going to go to all those lengths, but he might well be willing to pay a dime off the top to the NFL. So, I mean, I guess, to what extent do you think that might be underselling the potential growth of this?
Well, I think that's a good point and an interesting question. And I think so many people, when you talk to them, like I'm doing a panel in like an hour with Sharon Otterman, who's the CMO of William Hill. And when we did our pre-call, she kept talking about how, their goal is that casual better, right? That casual better that they believe is the thing that will grow the industry, and that's what all the research says.
It's also the dumb money. It's where they make their money. No?
Yeah, I guess so. I guess from my perspective, I've just never been that interested in that person. Like, for me, this is like, sports betting is like a real thing where, you're using analytics, and if you can put as much money through the system as possible and turn over that money, you can make, I mean, that's just the way, and that's the much more interesting part of sports betting than having like Joe Fan put $20 on the Eagles to cover because he likes the Eagles, right? That's just not, like, maybe that's where this industry grows, but to me, that's just not interesting. And I think that in many ways minimizes like the actual like value and potential impact of sports betting.
Well, I mean, it's a segmented market, obviously, and I think that the casual bettor, which is definitely what is mostly targeted in the UK, is it's much smaller bet size, but there's a lot more of them, and for bookies, that guy is the guy whose action you can take without getting worried that you might lose your shirt. Whereas when you're dealing with sharks, it's a different story. And I mean, certainly, just now speaking from ample personal experience, I mean, I've already been banned from half the online bookies in the UK for winning $500 on something.
Right.
So.
But isn't that ridiculous? I mean, isn't that like to me, that's just like at the core of like what I don't want the United States market to look like, and it's starting to look like that.
Well, it certainly drives me crazy, but they're running businesses, and
they could run their businesses,
the better they want.
They could run their businesses differently, right? There is a model out there, like if you look at what Pinnacle does offshore, where there's a recent podcast where they interview Marco Bloom, who's the lead trader at Pinnacle, and they're doing real data science and analytics, and they're using like the sharp bets as basically expert signals to their market, and then basically tuning their market and tuning their models based on having this sort of expert feedback loop. And that's smart, right? That's not just saying like, hey, I'm gonna just take this dumb money. Like, to me, like, I'm an entrepreneur. I've started 4 different businesses. Like, I wouldn't wanna be in a business where my whole business was around trying to find the dumbest people possible and trying to get them to actually like place bets with me, because that's where I get the best margins. I just personally wouldn't want to do that. Maybe that's interesting to other people, but it's not interesting to me.
So Pinnacle is definitely an interesting company and worth probably not necessarily as well known as it should be. So I believe their slogan is "Winners Welcome," and whereas the vast majority of the competition are looking for the casual fan who wants to put down $10 rather than the type of person who comes to this person and builds their own model. And one thing that I sort of am yet to understand myself about the math and economics of sports betting, and hopefully you can enlighten me, I guess, is that it seems to me just unfathomable that any one bookie could potentially hope to offer unexploitably accurate, efficient market prices at every given time on every single sporting event in the universe. Clearly, there is going to be somebody out there who's going to have a better idea of what's going to happen in some obscure game than you, the bookie, are. And if you're offering a price on anything, then you're going to get everything. You're going to get adverse selected against, so that the one guy who's placing money on that game is the guy who knows more than you do.
Yeah.
So how can you defend yourself against that except by doing what the UK bookies do, which is banning that guy when he makes too much money, And I guess, yeah, how does Pinnacle survive?
Well, I mean, they survive because they get a lot of volume and they're very sharp in how quickly they adjust their prices. And like I said, they use those expert signals to help. I mean, they're also charging, 110. Like they're charging a vig, right? They're built-in value to what they're doing.
Just for the uninformed, charging 110 means that you have to pay $110 to win 100 back on something that is a 50-50 event.
Right. But theoretically a 50-50 event. But so, this is a classic question, right? And there's this guy, do you know Matthew Trenhall?
I don't think I do, actually.
He runs a podcast called Inside Betting, and he's a UK guy, seems pretty sharp, and he's definitely taken this whole concept to task, where people like my podcast partner, Rufus Peabody, who was the guy that most recently almost won the World Series, or the first like FanDuel or DraftKings big first sort of like championship. I don't know if you heard about this.
Didn't know.
No. So in the U.S. there was this. They were basically trying to compete with the World Series of Poker, and they had a thing where people could buy in for $10K, and they would get $5K of real dollars to bet with over the course of the weekend, and whoever won ended up with the most money got $1 million.
That's fun.
And they paid out a bunch of. It was a huge overlay because there just wasn't enough people in to support that level of pot, and the pot was basically there from a marketing standpoint. An overlay essentially means like you have a positive expected value without ever even doing anything, right?
Yeah.
And Rufus was in this, and Rufus actually finished third, but there was a big deal where he basically their technology screwed up, and he wasn't allowed to make a bet. He was first going into the last game on Sunday, and then he wasn't able to get.
What were they betting on? Anything they wanted, or?
No, on Sunday it was just betting on NFL games. On the two, there were only 2 NFL games. It was I think it was the championship weekend or the divisional playoffs.
And it was just betting on who was going to win or who was going to cover the spread, or prop bets too.
Well, no. Early on in the weekend, on Friday and Saturday, they could bet on anything, and then Sunday they wanted to like build the impact, so they only let them bet on the 2 NFL games. And they shut it down at the beginning of the second NFL game, which was the Saints-Eagles game.
Yeah. And so, okay, so go on.
Anyway, so Rufus and I, we have a podcast called Bet the Process, and we're always talking about like the Pinnacle model versus like the William Hill model or whatever. And, this notion of whether you can really win and make more money in the Pinnacle model, right? Like, which is a better business model long term. And we've never done it. Like, we've never been bookmakers. We've never tried to run a Pinnacle, so it's really easy for us to just say this is the better model, because as gamblers, obviously it's the better model for us. But I mean, I've talked to some pretty sharp people like Ted Knutson. I don't know if Ted believes that the Pinnacle model can work. And I think at the end of the day, the key is liquidity. So if you're able to get enough liquidity, so that's why it kind of is sad to me that William Hill doesn't even try this, because William Hill has a ton of liquidity, right? They're huge, right? So they should be able to effectively manage a book of this sort. Like, let's say in your case of your sort of expert and your ability, like, just know who these people are, limit them to whatever max bet of $1,000 or whatever you think is real, and then move based on that information.
Well, sure, but then you're not. That's not the Pinnacle policy of winners welcome, right?
Pinnacle certainly will move lines.
They'll move lines, but will Pinnacle let me put down $100,000 on a bet at their opening price?
Probably not 100,000, and it depends on what sport. I mean, there's a lot of like caveats there, right? You can't. They're not allowed to put $100,000 on a college basketball game, right?
Right, or some obscure.
But not even. I mean, $100,000. The markets, and I don't know for sure on this, because I'm not putting $100,000 down on Pinnacle, but like, I would assume most soccer games you could do that. I would assume most NFL games you could do that.
Sure.
You probably couldn't do that in college football or college basketball. Certainly not college basketball.
Right. Yeah.
So.
Right. It's just but there's a limit to this, in that even if you want to take the Pinnacle approach of being of saying winners welcome, adverse selection is unavoidable, and you can't get away from that information asymmetry, and you need to.
Right, but you don't have to take 100 bets or 200 bets before you get some sort of a signal, right? You take 1 or 2 bets, and if you have any kind of liquidity and volume, how much are those 1 or 2 bets going to hurt you over the course of time, right? And they're going to lower your margin maybe slightly, your hold percentage. But if you can get more volume, right? Isn't that the way that like finance works? You want high turnover and high volume, and
if you're taking a cut on every bet, then yes. Yeah.
So I mean, that's ultimately like it's just like understanding compounding, right? It's like that there's just some simple theory here that seems to make sense but again, like I've never run a sports book, like I don't know, like, and I've never seen it in practice how it works. You can run numbers in a spreadsheet, but you have to obviously put huge assumptions in there that may or may not be true.
Yeah. And then from the other side, from the gambler's side, what would sort of your assessment be broadly, let's say, compared to something like, well, let's say compared either to financial asset pricing, which theoretically should be the most efficient because it's the biggest market, or maybe to something that's a smaller market like political betting. I guess, how sharp do you think lines and pricing are in sports? Presumably, if you're a sports gambler, then you think they're not so sharp that you can't beat them. And if legalization does lead to sort of an explosion of the industry and a lot more participants coming in theory, that should lead to more efficient pricing and fewer profits for everybody left. I mean, are we headed towards a dystopia where you can't make money anymore?
I don't know. That's a good question, and it's something we think about a lot and we talk about on our podcast, which is just this idea of markets tend towards efficiency. I fundamentally believe that. Rufus fundamentally believes that. And if you have a world where, like you said, used to be information asymmetry, potentially, news, whatever, that kind of thing. Now it's maybe, approaches like, and then at some point there is no more inefficiency, right? But I think there's always going to be smaller edges to be had in different ways, because essentially you are still betting against a market, and the good bookmakers aren't necessarily just trying to balance action, right? They are taking a side.
Yes.
And if they do take a side, right, there is this notion of like if they're taking a side, there must be an opportunity for someone, right? If they believe there's a reason to take a side. And
what's your sense of how often are they just trying to guarantee themselves a profit no matter what happens, versus how often will they say, you know what, let's take some risk here, we think the public has this wrong?
Yeah, I think that the good bookmakers are trying to take sides a lot, right? Because if you can make more money with that, edge in your favor, the built-in implied edge, why wouldn't you?
And that basically makes them the world's biggest sports bettors, right? And probably the most.
Exactly. And again, that's probably not dissimilar to sort of like the idea of why sharp, like a Pinnacle. I guess it would be interesting to know, and this would be a good question, like Ted would certainly know this, but does a Pinnacle take more sides than, say, a William Hill? Like, meaning, like, do they try to take a position more often than William Hill? And you would think they would, because they have better signaling.
Oh, I would think they would less, because the people trading on their markets are sharper.
Right, but I think that in the case of they have an ability to basically get aligned with, because they have that expert signal, they could feel more confident in taking a side than, say, William Hill would be, where they're risk averse and they'd be wanting to basically like just be 50-50.
Yeah, that makes sense. So I guess looping back to a previous question as far as just the growth and accessibility of all this. So if on my sort of cell phone right now, can I be geolocated? If I'm geolocated to within a state that has legal sports betting, can I place a bet with a bookie who has some physical presence there, or do I need to have a bank account and an address in that state, know your customer, all that stuff?
I don't know. I know you have to, most of these places, physically put money down, so you couldn't just like wire something in or whatnot. And I do think it's very hard. It's not simple right now.
That's going to place an enormously low ceiling on the growth of this. I mean, people do not want to.
That's why I say this all the time. This is why I said like I'm bearish on it, or I yawned. Because it's like it's not when you can like basically call one person in the U.S. and they can have their bookie call you and they can set you up with an online account within instance and fund it with $10,000 like that. Like there's no friction there, right? And if you compare that to the amount of
how many people have that set up? I mean, isn't that for the Jeff Ma's of the world?
No, I mean it's not the Jeff Ma's of the world, but there's tons of I mean, like I'm sure that everyone in this room knows someone that has a bookie.
Sure.
Right. So
this is a conference for people that do this, which is again is a small share of the addressable market.
Yeah, I guess. I mean, from what standpoint though? Like from a volume standpoint or from a numbers standpoint? You know what I mean? Like how many like $20 Joe Fan bets does it need to make up for, a $20,000 Joe Sharp bet?
I think.
Or Joe Whale.
Yeah. Well, I mean, if Joe Whale is a long-term profitable bettor, then every bet he places is a bet you don't want to take in theory.
Yeah, I just don't.
Is it or is it not zero sum at the end of the day? Has to be, right?
Between what?
Between the bettor and the bookmaker. It's only two sides to every trade. It's got to add up to.
Well, I mean, I think it's not zero sum, right? It's the other way, because if you think about it, if you just put pure volume, right, it's a 10% loss, right?
Sure, right. So they're starting out ahead of you, and
right.
Questioning whether you can catch up.
I mean, like the point is that it's interesting, right? Because when you talk about the parallels to the financial market, they're not there, right? Because in the financial markets, I mean, yes, there are a lot of parallels, but ultimately, it's a huge difference, right? Because if I go and make a bet, like some long-term bet or something like that, I'm not going to eventually make money no matter what, right? And in the financial markets, pretty much if you make a long-term bet, you're going to make money at some point no matter what, right? And so it's just a different sort of thing, right? Like you basically, this industry, you're sucking out 10% at every transaction, right? And maybe in the financial world, if you do high volume, you suck some out, but it's not the same.
Yeah. I'll just before we wrap up, I just want to return to something you raised at the beginning about this idea of an integrity fee. I mean, there's at the very least room for debate as to whether that is a forward-looking effort by the major sports leagues to embrace the new era of sports gambling and provide them with the necessary resources to protect themselves against any unintended consequences or negative externalities it might present, and a blatant cash grab. But nonetheless, certainly the conventional view is that it's certainly more of a cash grab than anything else, but that doesn't necessarily mean that there's no additional risk to the integrity of the sports as this stuff gets bigger, and particularly when you're talking about prop bets and betting on obscure small events that have no impact on wins and losses, but can be an opportunity for lower level players to pocket a little cash, point shaving to cover spreads and stuff like that. I mean, how much of this goes on already? How much would that risk scale up as the industry does? And what, if anything, could the leagues do if they were to be handed a large integrity fee to defend themselves from it, as opposed to just pocketing the money for themselves?
Well, I mean, I think it doesn't happen a lot, right? Maybe I'm naive, but I think the Donaghy thing was obviously an exception, not a rule, right?
That was an NBA referee who was in fact taking money to fix calls for gamblers.
Not according to the NBA, right? The NBA stance is that he wasn't, right? That's what they've kind of said, like that some of the stuff in the article was wrong and whatnot and all. I don't know. Anyways, the point is that that is a very high. This is a classic like availability heuristic or recency bias, where like everyone's just thinking about this as like. And there's been some scandals in tennis, right? Tennis has had a lot of like match fixing and that kind of things. I'm not familiar with the cricket ones, but I don't understand cricket. It takes like 3 days to play or whatever.
I'm American, me neither, but it is a very, very popular
it's a very
in many
popular
parts of the
sport.
world.
I think that the fact that the NBA feels like they needed to wait for sports betting to become legal to worry about the integrity of their game is kind of absurd. Like they should be worried about that regardless of whether games are being bet or not. And like they have a ridiculous, like is their integrity fee gonna pay towards Anthony Davis so he actually plays the entire game rather than just the 20 minutes in a game against the Lakers on television? You know, it's absurd that happens, and then they're talking to us about like what integrity fees they need when they can't even police their game to have like one of the top 3 players who's completely healthy just play the game to win, right?
Yeah.
How ridiculous is that?
Well, I mean, Adam Silver admits they need to figure out getting those incentives right, but I mean, but isn't that sort of whataboutism? Like, sure, there's something else that's also problematic in the NBA. That doesn't mean this other thing isn't a problem.
Well, but you haven't pointed out that the problem was that you had a ref in your league that you couldn't police your. I mean, this is just absurd, right? To say, if they want to say we believe that this is like our IP and that you can, then that's one argument. But the integrity fee argument is absurd because they should be worried about this anyways. Yeah. They shouldn't have a game that doesn't have integrity or isn't fair already. So the fact that this is the event that needs them to charge that is sort of silly.
Okay, well, I think we're out of time, but Jeff, thank you so much. Really interesting conversation.
Thanks.
And thank everyone here for listening.